If you've been following the tech world lately, you've probably heard that IPO season is heating up, and one name you absolutely need to know about is Bending Spoons. This Italian app studio just filed for a US IPO on the NASDAQ, and the numbers they put out are honestly jaw-dropping. So today, let's break down who they are, what their business actually looks like, and most importantly, is this stock worth investing in? Founded in Milan back in 2013 by Luca Ferrari and 3 co-founders, Bending Spoons started as a simple mobile app developer. But over the past few years, it has completely reinvented itself into something far more interesting. Think of Bending Spoons as a private equity firm, but for digital companies. Their entire strategy revolves around buying well-known but struggling tech businesses, cutting down the fat, introducing aggressive subscription models, and squeezing out profitability. Sounds cold? Maybe. But the results speak for themselves. They've already done this more than 50 times, snapping up brands you definitely know. Evernote, Vimeo, WeTransfer, Eventbrite, StreamYard, AOL, and Komoot, just to name a few. Now let's talk numbers, because this is where things get really interesting. In the full year 2025, Bending Spoons brought in $1.31 billion in revenue. But the first quarter of 2026 alone pulled in $601 million, which is a 132% jump compared to the same quarter last year. Let that sink in. More than doubling revenue in a single year. Their subscriptions are the engine here, making up 84% of all revenue. And they now serve over 500 million monthly active users, of which about 9 million are paying subscribers. In Q1 2026, they posted a profit of $27.4 million, which is a significant turnaround from losses they were still recording just a year ago. The valuation story is also wild. In 2024, they were valued at $2.8 billion. By the time they raised more funding last year, that figure jumped to $11 billion. And now with this IPO filing, Reuters is reporting a potential valuation of around $20 billion. That is nearly a 7 times jump in valuation in under 2 years. Big names are already in. Bailey Gifford, Fidelity, Durable Capital Partners, Cox Enterprises, and yes, even actor Ryan Reynolds has backed this company. They're listing under the ticker symbol BSP, and CEO Luca Ferrari has already stated they've identified over 1,000 potential acquisition targets for the future. So the growth playbook isn't slowing down anytime soon. But should you invest? Here's the honest picture. The revenue growth is explosive, and the subscription model gives them predictable, recurring cash flow, which markets love. They're also betting big on AI, using it across software development, customer support, and hiring, which could compress costs even further. On the flip side, this company grows almost entirely through acquisitions, which means it depends on cheap debt and available targets. They've also drawn criticism for the heavy layoffs that follow every deal. And at a $20 billion valuation, you're paying a premium for a company that only just turned profitable this quarter. So if you believe in the subscription economy, love a bold roll-up strategy, and have a longer investment horizon, Bending Spoons is a fascinating watch. But go in with your eyes open. This is a high-reward, high-risk bet on whether one Italian company can keep executing its playbook at global scale under the bright lights of the public markets. Drop a comment below. Are you bullish or bearish on Bending Spoons? And if you found this breakdown useful, don't forget to like and subscribe. See you in the next one.